The value proposition, though, for operators, because it must be very different from emerging markets. So emerged markets, they are looking for cheaper products, cheaper services. What's the value for the operator in those markets?
That's the big question all the operators keep asking. If you look at the global operators, I mean, the value for them is that they need to get into new markets. They've got shareholders who expect a return. And when they've had double-digit growth over the last 10 years, shareholders, want to see that. So, if you're holding Vodafone shares, you want to see that Vodafone is going to maintain that sort of growth. And their way of maintaining that growth is that they've got to either grow revenue by bringing in some new product. And I think for 15 years, everyone's been looking for that next killer app. Probably not going to ever get another killer app on the same level as voice or SMSs. Now they're getting into these emerging markets. So the value proposition for the operator needs to be tailored around what the value proposition is for the customer. If they get services to the customer, if they understand their customers better, and have an intimate relationship, essentially, is what it comes down to with their customers will be happy with the services, and those services will grow, and therefore there'll be a good revenue in it for the operators.
Of course, Arthur, we did have MTN subscriber numbers out recently, and they show that 7% growth in the subscriber base in the first 3 months of the year, lots of that coming from Nigeria and from Iran, not so much from South Africa, which is seen as a fairly penetrated market. Where's the next big market? Do they have to look further afield? Is there still growth in the magnitude that we used to see from those operators?
It's unlikely we're going to see that level of growth unless a country like the DRC, for example, stabilizes completely, and there's a massive investment in all kinds of infrastructure, not just telecommunications, but also roads and industrial infrastructure across the country, which then will stimulate the economy and stimulate growth. At that point, you might then see DRC becoming the next Nigeria. But right now, there isn't really that opportunity for that level of growth or opportunity.
So where are you looking next for opportunity, Sean?
I guess wherever our clients would take us. But the truth is that you will always be safe in numbers. Networks are going to need numbers. Handset manufacturers want to go where there are numbers. I think that as the network providers become better, so and we speak a lot about Nigeria, you'll see people walking around with 2 or 3 handsets. It's not because they want to be flashed with handsets, it's because they have no true trust in the capability of the network to carry the call. So there's a lot of drop-in of calls and people are switching between networks. So I think handset manufacturers are going to be challenged into the future. I think that Mark spoke about the one killer app. I don't think it's going to happen, but what there'll be a greater number of apps that people will start to make use of, and that's how we would potentially look at supporting clients.
Just jumping in here, I suppose the message that Arthur was getting across, and what I wanted to pick up on is that even though there might not be a new market that will have the same potential as a Nigeria or a South Africa, operators can do things differently in the markets that are already penetrated by whether it's their operations or another operations. And that's why we'll see a lot more merger and acquisition activity. And we'll see that the competition in each market probably maintains itself at about 3 to 5 operators, but those operators will be consistent across the continent. So it means they'll get more economies of scale. They'll be, start looking at things like network sharing. They'll start outsourcing, the network itself. So they'll become a lot more efficient in how they operate in those markets where they're already in, which will allow them to, make a bigger margin. Just by the nature of becoming better at what they're doing.
They also have to be very careful with how they push those margins. We're about to release research we've conducted across 20 African countries, and one of the messages that comes through consistently across all of those countries is, and probably 90% of business decision makers responding in the survey have said that the cost of telecommunications is too high. They want it to come down. But another interesting aspect that ties in with that is that something like 95% of them expect costs to come down as all the undersea cables and fiber optic networks are put down. So there's great expectation of lower costs, and there's a great desire for lower costs, and networks are going to have to take cognizance of that.
Gents, I'm afraid we're out of time, but thanks very much for coming in this evening.